Sunday, August 13th. Today's editorial is entitled Fast Cash. This is part one of two. What has the monetary order in store for the hoi polloi? A large dose of confusion, fear, and chaos. Where is it all heading? Clearly not to a welcome destination. With the latest declaration of a trade war this weekend with China, their response will be instructive for the longer-term horizon. There will be a very large reaction, and where it points will provide the short-term response in all markets. The dial is being turned up to 11 quickly, which begs the question, why now? What is the desired outcome? Where will the United States capital stocks head? How deep will the effect become over the next few months? Is this the end of the Federal Reserve's liquidity fest for the next few years? We can begin to assess some of the above in thesis and theory based upon history. The currencies. 91.88 is my line in the sand for the dollar low. Should it break this level and close under it, the potential for further downside increases in probability. For now, 92.50 is acting as support. The euro would need to break above 119.50 on a closing basis to move higher. The range would be 120 to 125. Irrationality rules as Europe is clearly in dire straits as well. The 117.50 to 118 level is acting as support. Should it fail and close under, the 112s open up with the gap fill at the 108s for the euro. Volatility has picked up and will continue as the algos remain on the hunt for every penny. The yen is range bound. It did close its gap fill. Caution is warranted now, as it spiked and was sold down. The next few weeks should prove pivotal for the yen. Bonds. Fed funds and capital flows continue to lead short-term rates. Momentum, strength, and trend are quite bearish and have been for some time. The boundaries for Fed funds is 764 pips to 1,220 pips. The dynamic yield curve in retrospect is interesting, as should the dollar strengthen, something will need to give to prevent the short end of the curve from becoming unruly. In the past, an equity sell-off has been used to contain accidents. I believe this will no longer perform as intended, and the Federal Reserve understands this. Yes, it will provide short-term relief, but it will remain very short in duration. Capital flows have reversed globally, with China's bond market becoming the largest recipient. Bond Connect arrived just in time. This was no coincidence and why I presented its importance back in July. It represents an exit. China's bond market is absorbing inflows at a record pace now. It can reverse quickly as the trade war will cause disruption in all movements globally. Equities. Prior August declines in 2014, 15, and 16 were volatile. Large retracements during each of these seasonal declines were typical. Will it be different this time? I do not believe so. Mondays are typically low-volume affairs with participation on the weaker end of the price action during the week. I believe tomorrow has the potential to be quite different. Participation will have increased as the headline news did little to calm the nervous and twitchy investor herd. A large gap down overnight would appear to be a high probability. We must always consider the irrational. This is a best practice. We will need to watch it trade first. The Dow has remained a leader for months on end. This is atypical as the ES has been the leader and is understood to be such by market participants. A divergence began a while back and it festers to this day. Over the past few sessions, the ES has appeared to revert to its leadership role, but the time period observed is extremely short. It has been easier to move the Dow as it has a far narrower component. Among the public, the Dow is what is most often mentioned. Rarely does one hear the S&P given the same weighting and perception. Onto the Dow. The INDU is traded below support at 21,862. 21,851 was the Friday close. This indicates a dip in of support by 11 ticks, 1 tick under or above the 12-tick rule. An extension to lower lows is clearly being suggested here in the Dow. 22,179, the cash IND August high, from the 21,496 July low, provides a halfway back at 21,837 for cash. I'm using stock charts as most do not trade futures and receive the benefit of fib discipline without confusion. 21,858.32 was the Friday close. We need to watch the overnight gap down below 21,837 on cash. 21,842 was Friday's low, a mere 5 ticks away. The S&P. 2407.70 was the July 2017 low, trading to the August high of 2490.87. The halfway back stands at 2449.25. Friday's close was 2441.32. It's important to note here the S&P has failed short-term support, as has the ES. The Dow clearly remains in divergence for now. Moving out to a larger drawn time, April 13th, 2017, the low was 2328.96, back to the August high of 2490.87. The halfway back would be 2409.90 on cash S&P. 2425.53 is the gap fill on the S&P. These are the levels that need to be watched this evening. Please remember, large retracements are part and parcel of the prior August sell-offs in 2014, 15, and 16. It is quite possible a far larger retracement to the downside is being traded. It simply has not shown itself yet. The potential for a far deeper retracement cannot be discounted. Part 2 of this update for precious metals will be presented later today. Thank you and have a great afternoon.